Hey everybody, we are going live with Ashley and Angelo, Tuesday Talks, where we discuss all the latest real estate headlines from the week, as well as your questions about any real estate or mortgage related items for Angelo and I to answer during the call. So, as usual, we have our typical delay while I wait for Angelo to go ahead and hop on so he can join our discussion today. But we have a lot of stuff to go over. It has been a crazy week in real estate, and every week seems to be different because, well, that's what COVID does. And so we are going to talk about some things, appraisal issues that we have seen here lately as it relates to loans, as well as what the economy is doing. We've had a lot of reports come in and out in regards to unemployment, forbearance numbers, creditworthiness, things like that. So we have a lot of stuff to go over. Here in Charlotte, we are still experiencing a very active, very competitive real estate market. So it's both great and a little bit, oh, there he is. Okay. I see Angelo's on.
What up, Ash? What's going on? I don't look very clear. What's up with that?
Camera dirty?
I just tried to clean it.
With your finger, don't you?
I think I need a new phone, actually. So.
Well, we can't do that right this second.
I know. What's going on? What's up with you?
I jotted down some headlines really quick for us today on our Tuesday talk. And keep in mind, if anyone has questions, anything related to real estate or mortgages, be sure to drop your question below in the comments. And Angelo and I will try to answer those during our session today.
Yes, please. Feel free. Ask away.
You.
What's that?
What's going on with you?
Oh, well, I'll tell you what we do have going on, which you'll be getting an email shortly. But guess who is
clear to close?
Yep. Yep. Stuart is clear to close. So Morgan's going to be working on getting the approval out and getting the numbers finalized. So,
woo. Great news.
Yes.
Closing.
Great news. Yeah, we had an appraisal waiver on that one.
Which was great because appraisals are dicey right now, right?
Yeah.
That kind of, that's a good segue for kind of a topic I know we wanted to go over today. So
yeah,
that.
For sure. So appraisals. Yeah. I mean, did you want to talk about your some headlines, or you want to do appraisals first?
I think we should dive right into appraisals.
Okay. So appraisals, anytime you can get an appraisal waiver, which is usually if you're putting 20% or more down, that's when I've seen the most appraisal waivers. Good credit, good reserves, lower risk factors. We're seeing, sometimes we'll get an appraisal waiver with Fannie Mae, and sometimes we'll get an appraisal waiver with Freddie Mac. So we always try both to see which one could potentially trigger an appraisal waiver. So if you're happy with the value and you don't need an appraisal, then I would strongly recommend not getting an appraisal. You're saving $500. And then your awesome realtor, Ashley, would tell you what the values are in the area. So you're going to be there. And if it's, and if Fannie and Freddie says that they accept that value, I mean, that's a pretty good value then. So,
right. To send anybody out to verify, right?
Correct. Yeah, they don't send anybody out to verify. It's kind of all an algorithm in their system. So anytime, and I've had multiple scenarios where they would come back. Let's say if it's even if a refinance, if I got an appraisal waiver at a certain loan to value with a refi, and of course it's usually 80% and below. If my client, if they say, well, you know what, I think it's worth more, I want to get an appraisal. So if you get an appraisal and the value comes in lower, then they're going to go off of the appraised value. They're not going to go off of the appraisal waiver that you received, maybe, you know, $5,000 or $10,000 more or whatever. So it's always good to go with the appraisal waiver if you get it. And like I said, I'm seeing it's about 50-50 between Fannie and Freddie getting the waivers, and it's always usually below 80% loan to value on purchases.
You are putting down at least 20% on the purchase side.
Yeah.
That's down payment.
Yeah, that's where I'm seeing the most are triggered. I've gotten a few above 80, like 82, 83% loan to value, but it's usually the 80% and below. So
it's like you said, less risk, which is
correct.
Like behind all of it. Correct.
Yep. So, and the reason why you want to go with the appraisal, I mean, we're battling right now with an appraisal. I think I talked to you earlier about it. It's the appraiser took an additional 2 or 3 days after the due date. It was due back. He didn't get it back to us in time, and we have no control over that. I mean, we have to follow procedure and just protocol. We can't, you know, and we followed up daily and hourly trying to figure out where this thing was. Anyways, it got sent in and immediately had to go back to him for revisions. So that took longer. And then we finally got the revisions. And then in underwriting today, this morning in underwriting today, they conditioned it for additional comps and things like that. So, you know, anytime you can use a waiver, do it. 1,000%.
Yeah. So I think that's another thing that I always clients always ask me. They're like, they don't understand like how the appraisal works, like who orders it and how that works. Like I don't know, right? It's not an
correct.
It's an appraisal for the lender, right?
Correct.
So
correct. Yep.
How
it
works.
So each lender has each lender's process is pretty typical, but each lender has different AMCs, they're called, appraisal management companies, that they have. Some of them are affiliated, some of them aren't, that they use, that you can order appraisals through. So we go in and we pick, we submit the request for the appraisal, and we can with some lenders we can choose who the AMC is, but some lenders we can't choose who the AMC is. So let's say with my favorite lender, UWM, we can choose class appraisals. We've had very good luck with class appraisals. You submit the order to class, and you have to pay for the order once you submit it, because let's be honest, if the seller doesn't agree to some repairs, or if the buyer decides not to go forward with an appraisal, if the inspection's been done or something, you know, comes up with the property, who's going to pay for it? You know, the buyer. It's ultimately the buyer's responsibility to pay for the appraisal. So, and it's anywhere from $460 to like $550 is like the cost for appraisal, depending on lender and AMC. And so once we order it, then the AMC they do like a round robin, and they try to assign it to different appraisers. And then once an appraiser accepts it, they'll notify us and say, hey, an appraiser's accepted it. And then sometimes it takes, with COVID, sometimes it takes a few days for the appraiser to schedule the appointment with the listing agent or whatever, it's on a MOTAC or whatever, to go in and inspect the property. And so right now we're seeing
very removed, right? Which I don't think a lot of, like, you don't get to choose. I don't get to choose who our appraiser is going to be. No, we have no say in that. And we can't, and they frown upon, we can only deal with the appraisal management company. We can't talk to the appraiser. Like we're not that we can't talk to them, but it's frowned upon. Like if you try to call them, because you never want to be accused of like trying to coerce value and things like that. So I just don't even, we just don't even, bother with all that. We just let the appraisal, let it come back at what it comes back at. And, but yeah, so anyway, so going forward,
So yeah, once he accepts it and he schedules the appointment for the appraisal, he'll go ahead and inspect the property. Sometimes it's taken 3 to 4 days. Sometimes it's taken 10 days after the inspection date. So right now with COVID, it's kind of thrown everything. We can't really put our finger on it. It's either super fast or really long, you know? So of course it depends on the area too, you know?
And I think too, that probably has something to do with like all the transaction volume, right? That is.
Oh, for sure.
So there's only appraisers out there, just like so many agents, so many lenders, right? Like you can only do what you can do. Correct.
Yeah. You know, and if the appraisal comes, so appraiser does the appraisal. He'll send it into the AMC once he's completed with it. It'll then go to QC, which is quality control. They'll look at it, and they usually, about 70% of the appraisals that we receive, they're sent back to the appraiser for some revisions.
Really?
And that, yeah, I'm seeing that's quite a few. Pretty much everything comes back and then goes right back to the appraiser for some revisions. And then he'll send it back, and if it goes through QC, it'll then get sent to the lender. We don't submit it to the lender. We don't do anything. Everything is done through the appraisal management company.
Yep. Because they don't want to manipulate anything, right?
Correct. Yep. Yeah. So the lender will review it and either say, yeah, we accept it, or no, we won't. We want to see this, this, and this. Some appraisals trigger, like the one that was in question today, it triggered a desk review. What's a desk review? If you don't know what a desk review is when the underwriter says, well, some things aren't matching up. There's some SSRs that aren't firing with, you know, certain values and things like that Fannie and Freddie have, that, you know, numbers don't match up. So then another set of eyes needs to be put on the appraisal. So it'll go to the lender's desk review department. Mm-hmm. They'll review it and then say if they need any other conditions on the property or not. Sometimes it flies right through desk review. Sometimes they want multiple conditions. So it's hit and miss.
And I think, you know, all this is to keep everyone, you know, in my opinion, right? All this is done to keep like risky things from being pushed through, people to like situation. Like it is to avoid a 2008 situation.
Right. Exactly. It's to safeguard your clients, my clients, but it also, you know, there's flaws. Everything has flaws in it. You know, there's flaws in the appraisal management process. There's flaws, you know, and I think we've talked about this before, and it's that appraiser's opinion of value. You know, he may think something's worth a little bit more money, have like a carport or something like that. He may think it's worth this, and another appraiser may think it's worth this, you know? So it all kind of depends on who you get, you know, and probably what kind of day they're having.
Is it the weather, like cloudy, or is it sunny?
Yeah, right. Right. Yeah. So
I saw a headline and I wanted to see what you thought. It was on Inman, and it was a report on the U.S. household debt and income. It's called the U.S. Household Debt and Income Report, and it's from the New York Federal Reserve. I guess they issue it or something. Okay. And basically, I think this is it's a good way to take a pulse on like the housing market, because they went over, you know, the types of debt people have, like, and where the increases are.
Yeah.
Who, like, people's credit scores, like where they're trending, and delinquencies. So this guy who was with Windermere Economics, he said that right now, you know, there's 4 categories that he has where Americans have the most debt, right? So that was mortgages are the largest portion, and then student loan debt, and then car debt, credit card debt, and then HELOC, and then there was like an other category.
Interesting.
And he said that the majority of the people that are getting mortgages or are asking for credit have really great credit. So that means like they're over 680, right? I think, isn't that right?
Yeah, 680 right now is definitely where it's bare minimum where you want to be.
And so he said in 2006, the percentage of people getting mortgages, their credit was only 22% of the people applying for mortgages had considered great credit.
Oh, wow.
And today, 64% of people getting mortgages have great credit. So
it's so important nowadays, especially with COVID. Everything's so hypersensitive to credit score. It's so important to keep your score straight.
I thought that was like such a huge, like, you know, the millennial in me is traumatized from, you know, the Great Recession that happened in 2007, 2008, right?
Right.
You know, I saw my parents' business like have to file for bankruptcy and all that. And so I always in the back of my mind thinking, oh my God, is this going to be, you know, is this going to be the next housing crisis? And,
right.
And so just hearing numbers like that, I felt it was like so reassuring, you know? And they also talked about a drop in delinquency. And I don't know if you can verify this, Angelo, somehow, but they're claiming that in the first quarter compared to the fourth quarter of 2019, there was a 1% drop in delinquency.
Really?
Yeah. So in fourth quarter of 2019, the delinquency a percentage point greater than the first quarter of 2020.
That's pre-COVID, I'm assuming.
Yep. Yeah.
Yeah.
Like this, the most recent, I guess, information they had, I guess.
Yeah. No, I mean, it has been trending downward. You know, the delinquency rate has been trending downward. I know I read something, I think it was last week. The FHA delinquency rate was climbing a little bit, but it was climbing with borrowers that had credit scores in like the 620s, 640s, 600s. Okay. So it's just kind of goes to show the lower the credit score, of course, you know, the higher the delinquencies. So, which is
why, right, they did that overlay, I guess.
Yeah, right now, I mean, well, a majority of my lenders are at 680 minimum. They won't touch any government loans under 680. I just had one or two open up that would go down to 620. But yeah, so we were starting to see some easing off on that, some opening up. But you're still paying. I mean, if the difference between a 680 credit, let's say 720 credit score FHA versus a 640 credit score FHA is probably going to be at least 1% in interest rate, if not more, and points just to get it there. So it's very important to keep your credit straight.
Yeah. I mean, I think that's interesting. And, you know, I'm glad that they have, I feel like it's like a double-edged sword for me to say this, but I like to see when they're being more cautious and they require a higher.
Yeah, they try higher, right. Yeah. I do think it's, you know, the lenders, they don't, you got to think of everybody involved too, which this goes on a way deeper level than is probably necessary for this, our little Tuesday talks, but just think about how, like, we're the primary market right here. Okay. So we package it, we sell it to the clients, and then it gets sold on the secondary market. And then they have bondholders that buy the paper. And then they have, you know, investors that buy the paper. So it's a downward, you know, so if it started to get bad and they were just doing crappy, you know, just selling crappy paper, kind of like back in the day when they were selling A-rated or D-rated bonds with A-rated bonds, you know, packaging them up in the same, what happened with the housing crisis, packaged them up in the same conduit and then sold it on secondary. So you had
rated bond. You got to dumb it down for this girl.
Yeah. So Standard & Poor's and Moody's you have bond ratings.
That's right.
So a 30-year 700 credit score client will have a AA bond rating, which means that's like high, very good, right? But then your subprime your subprime 600 score borrower bank statement or a stated income. This is back in the day, stated income type borrower. They had a D-rated bond. So lenders, what they were doing, the rating companies, the investors, they would package up the AA rated bonds and they would shove in the D-rated bonds inside the, their portfolio of loans, and then they'd sell them off. So they would think they're getting A-rated bonds when it could be a mixed bag, could be 50% D-rated mixed in with those A's. So it's going to make the whole thing, collapse once. And it did. So, and so much has been, done to prevent that from happening again.
Yeah. Are you favorable to kind of regulation? Because some regulations, right, are a pain in the butt and like seen as like, too much control. From a lender standpoint, from a mortgage broker, what do you think about regulations that have been put in place?
Of course, depending on the pendulum definitely, after the crash, the pendulum was like way here, and then it's kind of come back, and things have loosened up, and I think regulation is good. It keeps checks and balances in place, but too much regulation is bad. Like some of these timelines that we have to, 3 days for, to issue the prelim CD before they can sign the paperwork. It's like this whole cooling off period with things. It's just, I think that's a little much. I mean, we've adapted, and that's, mortgage brokers, we're quick, we're nimble, we're small, we adapt to change very quickly. We've adapted to that change, and now it's just, kind of standard operating procedure. We're just used to it, but, too much regulation, it can be bad. Yes.
Especially when it doesn't make sense. Like, the 3-day situation. And it always stresses me out as a real estate agent because, I'm like, are we going to be able to close on time? Because had they gotten the CD and, what
right.
I mean? And some people I feel like aren't really following that rule to a T like they used to, right?
Yeah, they have to. There's been some, there's a gray area in the actual Dodd-Frank rule about the 3-day time period when they can, if this could, once again, I don't want to.
I know, sorry.
Say too much because it just gets really muddied up with how complicated it can be. So there's three main triggers that need to be met before you can send the preliminary CD out. Okay. Well, first of all, you can't close a loan in less than 7 days. That's a rule. You can't do it. So let's say, you're doing a loan and you have the 3 triggers that need to be met before the CD can go out is appraisal, because it's value, because that determines loan to value. It's loan amount has to be set. If that changes, that could delay. Interest rate has to be locked. The homeowner's insurance, the premium we have to know what that premium is, because once again, that is included on our debt to income ratio, and we have to know what the taxes are, because that's also included in the debt to income ratio, just like HOA dues, when the appraisal comes in. So there's 3 main: appraisal, homeowners insurance, and taxes, that must be met before we can issue a preliminary CD, which is then they sign that prelim CD, and then we can, get all the other conditions into the underwriter to get it closed, if we still need to get it closed within that 3 days. So if we know, we're on a tight timeline, we'll be like, hey, we have these 3 things. Let's get them in, get them reviewed so we can send the CD out and close, in a timely fashion. That
ticker,
What's that?
And so you're meeting all those requirements within a timeline so that all the days,
correct,
the days are checked.
Correct. Yeah. And it's compliant. They can't, there's no exceptions to that rule. Like, it's 3 days. Like, you can't, act of God, whatever. They say that you can maybe, do it, sooner than 3 days, but nobody's done that because they don't want to get, they don't want to get sued for anything.
Why
so they'll come to.
Is that just an arbitrary number that has been put together, or like what is like what is the thought?
The methodology behind that is called the cooling off period. Okay. So kind of like for refinances, you have the rescission period. You have 3 days after you sign the paperwork, and then the loan funds on day 4. And so that's for you, because, have you ever had buyer's remorse before?
Yeah.
Yeah. So that's exactly kind of what they're kind of doing here. So let's say, yes. Oh my God, I love this, Ashley. You showed me a house. It's $300,000. I didn't want to go over a certain amount, but I really love the house. And I say, I want you to make an offer no matter what, yada, yada, yada. And then get down to it. When we really look at the final numbers, you see them, you review them, and then you have basically 3 days to kind of cool off and kind of really think about it, just to make sure that this is what you want and you're ready and you're prepared for this. It's, you know what I'm saying? Because of course we all want, what's that?
So like they could sleep on it essentially.
Basically. Yeah. Because I mean, that anybody can walk anytime in a real estate transaction, but of course they may have EMD to pay for and DD and all that stuff. They'll lose that. But you don't have to close on a house. If it's something happens and you decide, you know what, this isn't for me, you can walk. You're not bound. But once you sign for purchases, because they fund the same day, once you sign and you walk out of that attorney's office, that's it. It's done. Once it's on record.
Yeah, you own that. You can't back out.
Correct. You can't back out. No. And so for refinances, you can sign and then walk away a couple days later. And if you don't decide it's not for you, I've been doing this quite some time, and I've only had 2 that I can remember. I've only had 2 rescissions, people that have rescinded because they just decided that they didn't want to do it. It sucks, but
that's so crazy.
Yeah.
I didn't know that you could do that on the refinance side. I mean, they already own the house.
Yeah, it's a refi. For investment properties, there is no rescission period, but for primaries, there are.
Huh.
Yep.
Interesting.
Yeah.
No.
Yep, for sure. Absolutely.
So I am also seeing some more inventory hit the market a little bit.
Are you? That's good.
I want to tell everybody out there, you're under $100,000. That's your price point, and you need to purchase a home under that dollar amount. It is it is competitive. I put an offer in on a property this weekend. I was one of 47 offers.
What?
In 24 hours.
Mind's blown, Ash. Holy cow.
I mean,
within 24 hours?
24 hours.
Wow.
Yeah. And then on top of that, right? So, I mean, this isn't abnormal when you're buying a house. The buyer wants to see the property, right?
Right.
You put on top of that there are not supposed to be, in the state of North Carolina right now, any overlapping showings, which means only one buyer agent and at most 2 of her clients, right? Like 2 buyers, husband and wife, or friend and friend, whatever.
Right.
Can show a house at a time. So, and we have to schedule those appointments via showing time, which happened to go down. The showing time went down, which is how people schedule appointments on house last week.
Oh no.
For I think it was almost probably 20 hours it was down.
Whoa.
It was on
showing times is last Thursday that happened. So showing time, that's not only North Carolina. I mean, that's like a big company that everyone uses. So just wow.
So
wow.
Appointments via showing time last Thursday, which typically just for all you buyers out there, Thursdays are normally days where you will see the most houses hit the market because you're going into the weekend, right? So when you're going to put a house for sale, normally you'll show it as active on a Thursday. That's just kind of how it is.
Okay.
So then when that happened, nobody could schedule an appointment. And it was like, it was insane.
Wow.
Yeah.
Wow. That's crazy. When technology fails. Man, oh man, oh man.
As an agent, I am so dependent on showing time. I mean, that's how you leave feedback on a listing after you've shown it to a buyer. That's how you leave the seller feedback on what your buyer's concerns are, if they like, blah, blah, blah. Which is a really good tool for the sellers to have, to be able to have some insights onto what the market is saying about their property.
Yeah, for sure.
You couldn't, I mean, I was like, what?
Just drive over there.
Do it the old-fashioned way. Call, text, send a pigeon to.
Right.
Was getting blown up because people were frantically trying to schedule these appointments because the demand is so high, the inventory is so low. It was a nightmare. I mean, but we got through it and it's up and running. But
what do people for like yourself when you're getting ready to list a property on the go live with it? What's the rule of thumb? Do you do it on a Thursday? Do you do it on a Saturday? And why is there, maybe there's different days that you should do it?
Well, typically I like to do a coming soon, right? To introduce the property in the MLS to other agents to let them know that this property is coming soon. So let your buyers know, right? Nobody can tour it during that time period. It's more of just like a marketing,
just to okay. Yeah.
Warm up the audience.
Smart.
And then I usually like to list a property as active the Thursday before the weekend. So that Thursday morning, I like to list it as active. So then
that's like the top of the list kind of thing. This is okay. That's smart.
And people can, because a lot of people look at homes on the weekend, right? Because people work during the week.
Right.
So then that way it's on their radar for that coming weekend and they can get in to schedule an appointment. Fun fact, I don't even remember where I heard this, but most people are searching for homes Friday morning at 11 a.m. That is when you see the most activity.
Really?
Realtor.com. Isn't that weird?
Wow. So it makes complete sense that why you do it on a Thursday night,
Yeah.
So interesting.
I've seen people it's kind of weird. Since COVID happened, I have seen there's no rhyme or reason when agents seem to have a listing or a seller raises their hand, it's like they get it active as soon as possible. It doesn't stay. That's what I've seen here recently. I'm sure as school starts and maybe there's more of a routine gets established again.
Right.
Fall back into that though.
Yeah. Huh. Now, open houses are kind of a thing of the past right now. Do you do is there virtual open houses? Where is there?
So I've seen other agents do this, and I'm just doing this currently with my sellers. I'm only doing virtual open houses because in North Carolina, we're still under a pretty tight guideline.
Yeah.
And my sellers have been living in their houses, so I just don't feel like it's a good idea to open my sellers up to an endless amount of buyers.
Right. Right. Makes sense.
And in California or some state here recently, apparently somebody who came to an open house had COVID. They came to the open house, and then the sellers ended up getting something flipping crazy. And I was just like,
wow.
imagine that would just be terrible.
Oh man.
But
yeah, not worth it.
Not in my opinion, but I mean, I think some agents are doing the traditional open houses, and I'm sure they're taking all the precautions.
Like 1 in, 1 out, or whatever, however it needs to be. Yeah.
I don't feel confident in my ability to like stop us.
To police that. Right. Yeah.
Not to mention, I haven't been able to find like Lysol wipes or any of that stuff to wipe anything down in between.
I know.
It's
still crazy out there, man.
Anyway.
It's gonna be this way for a little bit.
Yeah.
For sure.
Yeah.
Well, we can adapt and we change and we just kind of go with the flow. We make it happen. Yep.
Well, cool.
This was fun. This is always fun. I can't wait for these every Tuesday now.
I know.
Hopefully, I'm going to get a new phone eventually. When the new 12 comes out, I think I'm going to get the new phone and, get my, I don't know what's going on over here with my screen, but whatever.
It's like a window wipe or something.
Right. Probably should use some soap or something. Yeah. So,
cool.
Yeah. Well, rock on. Yes. And anybody, I see Pete DeRose joined, Minnesota Kim joined. If you guys, there's some other people that, oh wow, a lot of people joined. If you guys, I'm not sure if they're still on here or not, but yeah, if you guys have any questions at all, feel free, reach out to us, send us a direct message, however you want to get in hold of us, Ashley Hannah Realtor, and then me at CLT Mortgage Guy here in Charlotte. So, if you have any questions, feel free, send us an email, put it in the comment section below, and we will see you next week.
And we are going to be moving our Tuesday talks to 1 p.m. I don't think I put out an announcement. So next 1 p.m., we're going to try to get on the ball with like reminding y'all it's coming.
Yep. Yeah, for sure. Yep. Going to get the word out there. So, and if, we just want to serve as a valuable resource to anybody that's, looking to purchase, refi, whatever, when it comes to real estate. So just use this as a resource, if nothing else.
Absolutely. And thanks so much for tuning in, and we will see y'all next week.
Yep. See you. Bye.
Bye-bye.